time now to turn our eye to business. Kate Moody is here for that. Good evening to you, Kate.
Hi, Mark.
Mounting tension between Russia and Ukraine impacting the aviation industry. Tell us more.
Yeah, well, the Dutch airline KLM has now stopped flying to Ukraine and stopped flying through its airspace. Germany's Lufthansa is considering doing the same. British Airways doesn't operate flights to Ukraine, but it does appear to be taking longer routes to avoid flying through Ukraine's airspace. Ukraine International Airlines, meanwhile, has said that some of its insurance companies have rescinded coverage for many of its aircraft and internal routes. The carrier has also had to send some of the planes which are on lease out of the country. Ukraine's government is trying to keep its airspace open for international and commercial use. On Sunday, it said it was allocating just under $600 million to cover some of the financial risk for airlines, insurance, and leasing companies. Well, those tensions are weighing on travel stocks and global stock markets as well. The major European indices dropping under that pressure. Losses of around 2% in Paris and Frankfurt, about 1.7% in London today. Wall Street is paring back some of its earlier sharper losses. The Nasdaq now trading above the flat line. U.S. investors are also looking for hints from the U.S. Federal Reserve about the planned pace of interest rate hikes. Oil prices have hit a nearly 7-year high because a conflict between Russia and Ukraine could disrupt those supplies. Analysts say that investors remain wary of geopolitical uncertainty.
Wir wissen nicht konkret, was passiert. Das Problem ist, wenn beide Seiten natürlich auch verbal so hochrüsten, ist der Rückzug kontrollierter Art sehr schwierig. Und das lastet hier drauf, weil mit einem militärischen Konflikt die ganzen anderen Rattenprobleme auch kommen. Inflationsbeschleunigung, Energiesicherheit nicht mehr gewährleistet, viel zu hohe Gaspreise, Ölpreise.
A new report says that Europe's biggest banks are still investing in new oil and gas projects, despite having committed to reducing their carbon footprint. The campaign group Share Action says that more than 24 members of the Net Zero Banking Alliance committed $55 billion last year to fossil fuel projects. A recent warning from the International Energy Agency said a key step to meeting climate goals would involve cutting funding for new oil and gas developments. Can love conquer supply chains? That's the question for many florists this Valentine's Day as they deal with ongoing disruptions but to both their stock and their prices. Charles Pellegrin has more.
Roses are red, violets are blue, planes are grounded, ships are too. This year, wholesalers are having a hard time getting all the flowers they need for Valentine's Day.
There are issues with getting trucks in and out, in logistics, and I think that's been a long chain of events with the pandemic, with bottlenecks, with production, growth production, and also airline routes have been rerouted, and so it's becoming more challenging to get flowers into the area.
But consumers are still willing to dig deeper in their pockets. This florist has seen prices double since last spring.
Even the prices have gone up. I'm still able to, do the arrangements, and they don't mind about the price, which is kind of surprising.
But some people are choosing different gifts. Retail spending is expected to reach close to $24 billion this Monday, with candy being the gift of choice for most respondents at 56%, while flowers are third at 37%, just behind greeting cards and ahead of spending an evening out, all of which will have been affected by the 7.5% bump in inflation over the past year.
I think we all realize that that inflation is around us everywhere, no matter where we go, and it's in flowers as well. But I don't think you can put a price tag on the cost of love.
And here's to hoping consumers will agree.
The average American, Mark, expected this year to spend $175 on Valentine's Day gifts.